Testing 1 2 3. Let me see. Testing. Big mic malfunction, but I'm back. That's so annoying. The one time I don't test the sound and it's broken, but now it's working. So thank you all for all the notification. Live TV. The gremlins never cease to not get me every single time. Anyway, the show is about crypto confusion. We're going to look at over 50 nuggets of information and a lot of confusing signals, both on-chain, charts, etc. We'll try and make some sense of everything that's going on so we can direct our positions going forward. And of course, now this is investment advice. Thank you so much for being patient. And I see you out there, T&D and Cybertooth and everybody else. And if you want to amplify your intelligence, please subscribe to the channel. It's no longer you against other individuals. It's you against the machines. And this world is going to become ever more competitive as we go forward. Today, unfortunately, I always start with what I have most news of. And most of the news is actually bad news, I'm afraid. So let's jump in. But don't worry, I'm going to go bad, then good, then ugly news at the very end. So stay tuned for that. First of all, this is the market over the last 7 days divided by Bitcoin. Everything denominated in Bitcoin. We'll talk a bit more about the denominations of Bitcoin later in the day. But you can see here, the only thing that beat Bitcoin over the last 7 days is XRP, which is pretty stunning. Everything else bled against Bitcoin, which is shocking. Let's look at the dollar returns, which aren't as bad against the US dollar. We know the half-life of a fiat currency is 10.4 years, but Bitcoin beat the dollar up 0.5%, and XRP, and of course, stable coins don't matter. But Ethereum did fall over the last 7 days, down 4%, which was a bit stunning. We'll go into a lot more data though. Let's look at money flows. The market has been rattled. The SEC, the orchestrated choke point 2.0, etc. It has taken its toll and it's made investors very anxious. So digital asset investment products saw outflows. This is, what's that, 1, 2, 3, 4, 5, 6, 8 weeks in a row of outflows. $417 million left the cryptoverse. And we believe that this is totally related not to interest rates, not to inflation, but to the SEC rattling the markets. It's my theory anyway. Might be different. Let's look at fear and greed. In addition, fear and greed has dipped to 45. We spent basically the last 3 months up around 50, and we had a little dip on the 6th of June, but we are at 45 right now, and that's the lowest we've been since March 2023. Thank you so much, Mr. Hammer. Hope all is well. And yes, San Luis Obispo is a beautiful place. Let's look at the S&P 500 compared to Bitcoin. What's interesting about this is you see here S&P 500 and Nasdaq especially. Nasdaq is up 40% year to date. The S&P 500 is now at a 14-month high. A lot of people felt this would make a new low. A lot of people still believe the S&P 500 will go down to 3,300, 3,200, but it's defying gravity. And that's because markets are forward-looking and there's a lot of money that needs to be plowed into winning names, and that's what's driving this. Now, it is frustrating for many because crypto is at a 3-month low, and you can see here, ETH is at a 3-month low, Bitcoin at a 3-month low, and the S&P 500 at a 14-month high. So this is a breakdown in correlation between markets, which is good, but the crypto people wanted to go the other way. But again, talk more about that later. Let's look at Bitcoin, the 200-week moving average. This is a very, very important number. I love this, 25888. In some cultures, people believe 8 is a very good luck number. But you can see here, we dipped below the 200-week moving average, bounced above it, and then below it ever since. But the good news is we seem real stable around that 25.5 level, 25.6, and it bounces off that. A lot of people, like myself, were hoping for 25K to get a little more Bitcoin, but that didn't happen. Hopefully, we'll get one of those vicious wicks. I'm sitting and waiting, but it has not happened yet. But we need to get it back above that 200-week moving average. It's a very good psychological indicator, because right now, this is one of the confusing signals. Being under it typically has bearish appeal for others, but being stable right under it is giving people confidence. The question is, how do you construe the data? And there's a lot more to come. Let's look at SOPR, the equilibrium. Again, more confusing signals. We are at a decision time with the SOPR. And that is basically the short-term holder realized profit loss ratio. And it's at that flat line of, all right, I'm about to go from profit into loss. Should I sell now and take profit? Or should I just hold tight? Or should I stack more? Again, I'm trying to build a picture around data points to tell us where we're going to go next. So that is typically, when we come close to SOPR at 0, that is typically a bounce off point. And if we do bounce there, that is considered bullish or constructive. Now, if we do break down below it decisively, that could suggest weakness in the market. And again, we'll see here where we go next. But this is, again, crunch time, like an NBA final. Let's look at what the big money is doing, the whales. The whales have slowed down. They were stacking over the last 3 weeks. The Bitcoin accumulation has come to a halt where they're kind of neutral. They're not selling, which is good. You don't want to see red here at the 10K plus whales. They are kind of like pausing and saying, let's see what shakes out. Again, we've gone from a transition of heavy accumulation up at that top cohort. Blue means stacking, red means selling. But the other good news that counterbalances the whales not buying is also the shrimp and the small fish, etc. They're not selling either. They're moving into kind of a neutral space as well. So we'll watch this very carefully as we do every single weekend. But again, it's kind of funny. There's so little volume out there and things are holding up really well. And we know the answer to that too. We'll come to that in the good news. So first of all, the bad week for the top 3, thanks to the SEC. As you know, I like to rhyme here when I can. Bitcoin is actually up since we met last Tuesday, up 1%. Well, yeah, these charts vary. We are just right under 26K right now as I speak. Actually, let me check. My chart is not even open. Let me pop my trading view. We'll come back to that in a second. But you can see as well that, let me make sure I'm saying the right thing. We are over 26K again. We're exactly 26,060. So yes, we are still up 1% for the week. And ETH is down that 4% that we covered at the beginning. And Binance got hit hard, but there's also some very interesting stuff going on with BNB coin, which we'll come to in a second. You'll see this whole tapestry is woven together somehow. It's not just random slides. Now, the top 50 last week. XRP, the winner, as we saw on the green chart as well. Bitcoin up a bit. Leo up a little bit too. But Solana, MATIC, Cardano, ApeCoin all got hit hard because of the SEC. What's interesting to note though, yes, over the 7 days, all of these things are down 23%. But year to date, one is up 54%. And that's another important thing to know is, you can always find a week in time or a month in time or a period in time where things do bad, but you got to look over the greater scheme to find exactly what's going on with the assets. Now, getting back to more confusion, there has been complete confusion between the SEC and the CFTC. And even magazines like Forbes and Business Insider are picking up on this. Like, what are unregistered securities? Everybody's scratching their brains. Well, the SEC defines a security as it could apply to many cryptocurrencies. And that is something with the idea of generating profit over time, which is more like a small business selling ice cream or something. Very different to how cryptos actually technically work. Now, the CFTC definition of a commodity is much narrower, and now people are beginning to see that it could potentially exclude many cryptocurrencies. But there is a lack of clear regulation in this area, and it's creating a whole lot of uncertainty. And investors hate uncertainty, and that's why we're kind of in that confusion, no man's land. And of course, the SEC is doing some weird stuff. Now, Forbes, of all magazines, come out and think that there is a secret alliance to destroy crypto. This is what many of us have believed all year, but now even mainstream magazines are coming out and saying there's a secret alliance to destroy crypto by usurping Congress. And for them to come out and say this, kind of stunning. Note who's starring in that picture. Gary Gensler and Elizabeth Warren. Two big fans of crypto, of course. No, actually, Gary used to be, but then he flipped. It's always good to be steady and consistent. Never flip, swap allegiance. That means you've got no backbone. Let's talk about Gary Gensler, SEC update. crypto fights back. And the reason we talk so much about this is because it has a huge impact. It's another lid on top of our cryptoverse. So the SEC is now being sued by Coinbase for not providing clarity on whether or not certain cryptocurrencies are securities. I am very convinced this case has a lot of legs. They begged the SEC 14 times to see them. They turned their back. That is negligent on the SEC. Also, Twitter added a community note to a tweet by Gary Gensler correcting him on a statement about Coinbase. What the community notes are unbelievable, and it really brings truth to the world, which is fantastic. It was also revealed that Gary Gensler applied to work for Binance in 2019. Talk about a black eye. Talk about flipping and swapping allegiance. And also, a bill has been introduced by the House of Representatives to remove Gary Gensler as SEC chairman. I doubt this will happen. It'll be gone before they can force that through. But anyway, the point is it's giving them a very unpopular look. And the SEC is facing increasing scrutiny from Congress and the crypto community over its handling of the crypto situation. This is great. And this is basically, not only do they now have to defend themselves, which puts them on the back foot, but it means when they're on the back foot, they can no longer attack, which gives crypto time to breathe. And again, the next 300 days are going to be fantastic because of the Bitcoin halving. Let's also talk about the big guns. CZ and Binance are bringing out the big guns. They hired another former SEC enforcement co-director to the legal team, a guy who's a pit bull and knows the inner workings of the SEC, knows, like, for example, Gary Gensler was questioned in front of Congress and he didn't answer any questions. Just denied everything. And he said, yes, we have records on 6,000 cryptos. If he doesn't have records, he could be found lying to Congress, which is against the law too. Again, more confusion, more potential dishonesty, allegedly. We'll see. But these guys will find the receipts. In addition, Binance, this is an interesting one here as to what's going on with Binance Coin, because we are seeing something interesting in this chart. You can see the big dips down from, 400 way back when, but Binance Coin has defended 4 separate price levels over the past week. And this suggests, that there is a large buyer or buyers who are willing to step in and buy BNB at these levels, even though there is a ton of selling pressure. And the entity with a vested interest in the price of BNB is, guess who? Yep, Binance itself. This is because BNB is a utility token, and I never liked utility tokens, but it's used to pay for fees on the Binance exchange. If the price of BNB falls, then Binance makes less money from fees, unless they jack the rate in Binance, of course. And it is possible that Binance is the buyer to prop up the price. And this could be done by using its own reserves of Binance or by borrowing Binance from other investors. And again, we don't know what's going on here, but who would actually be buying it at these levels? I don't know, but that's just one theory. Anyway, let's talk about Binance Balances as well. There is a bit of a bank run happening on Binance. It was holding strong when I spoke to you a week ago, but that changed. And now ETH and Bitcoin and stablecoins are draining down pretty big percentages in a very short window of time. You see the Bitcoin balance fell by 40,000 Bitcoin. 24,000 Ethereum got drained, and stablecoins about 1.6 billion, 1.7 billion. So there is a little bit of drainage happening on the actual exchange, but I've no doubt they have everything that they claim to have, etc. Let's talk about other news and a more SEC fallout. This eToro came out today and they said they are going to remove access for the customers to 4 different cryptocurrencies: Dash, Decentraland, Algorand, and MATIC. And that's, again, another hit to sell pressure. And we're going to dig into some of the altcoins now and see how they're holding up because of this. But just before we jump into that, let's talk about some perspective of what happens to a token when it's attacked by the SEC. Let's look at this beautiful chart regarding XRP here. This is XRP performance after the SEC charged XRP in December 2000. The token went from, about 40 cents, 35 cents, up to $1.84. Since then, it's been languishing, which is kind of part of the whole bear market, you could argue as well. But again, the point is, it's not the kiss of death. The other point is, it takes years to prosecute this stuff. So don't sweat it, everybody. But it does definitely impact buying pressure for sure. And of course, we do create a Substack. Community member writes it for us. And you can get daily summaries of every slide and everything that I say. Today is over 50 nuggets, and it'll cost you the price of 5 mochachinos from Starbucks a year for nearly one of these every single day. And now, good news. Let's switch gears. Let's talk about the stock market over the last 7 days. Nvidia up 5%, Google down 3%, Apple up 2%, hit a new all-time high today, by the way, and Tesla up another whopping 16%. Massive move again. A lot of people still don't really understand what Tesla is, but now they're beginning to realize what it is. Now, this is stunning too. Tesla is now up 150% over the last 150 days. Yep, it's operating like a meme token to a large extent. And that's a pretty good performance. Also, it's making records. Tesla's now up 13 green candles in a row. This is unprecedented. And it's as if each green candle gets steeper and steeper, goes higher and higher. You know, going up $2 or $3 when it's $140, $150, no big deal. But going up $10, of course, when it's at 140 to 150, 150 to 160 is pretty impressive. And there's no sign of this thing slowing down so far. So, touch wood. Also, a lot of FUD flying around, like Cathie's dumping Tesla. Well, no, she had to let go of 5% of her holdings because Cathie Woods and ARK Invest can't have more than 10% of their holdings in one asset. As the value of Tesla goes up, they need to lighten the load. If Tesla goes up another 5%, they have to sell another 5% because it'll explode beyond that 10% threshold in their portfolio. So again, don't freak out about news like this. It's just the way they're structured. In addition, let's talk about Nasdaq versus Bitcoin. You can see here, despite the big run of Nasdaq this year to date, which is 40%, Bitcoin is still up a little bit higher, which is good. This chart is over the last 90 days. You can see over the last 90 days, Bitcoin is up 32% and the QQQ is up 21%. So again, still ahead, even despite the Nasdaq has far outperformed the S&P 500, which has crushed it this year as well. Now, despite the SEC, this is kind of an interesting chart. We talk about Bitcoin season, altcoin season. We were at 4 for like a couple of weeks, which I've never seen before for such a long period of time. But despite that, despite the SEC, we're moving to alt season. So there are things that are actually beginning to do better over time. So yes, alts have been hit, and they've been hit hard. But can you imagine what happens when all this cloud and dust clears? Wow, it'll be incredible. Also, Bitcoin, illiquid supply hits an all-time high. And just to dig into this for a second, just follow that little yellow line on the chart, and it'll show you exactly what happens. And this is kind of historical because, one, it's never been this high, of course. And that means 72% of Bitcoin is not for sale. Okay, the illiquid supply are people who tend not to sell. And especially where we are in this cycle. These are veterans, they know what they're doing. But what's also interesting is over the past 30 days, 131,000 Bitcoin have gone illiquid. This is also the fastest rate ever, and this is likely due to a combination of factors. Investors are becoming more confident in Bitcoin as a long-term investment. The halving is coming up. Even with the recent Bitcoin price volatility, it has made some investors hesitant to sell, and apparently some institutional investors are starting to accumulate. So interesting times there. Let's look at performance from the bottom. We all know we had a bottom in the crypto market on the 21st of November. It was the last black swan that have hit us. You could argue that the SEC stuff is another black swan too, but again, it's not scaring Bitcoin, but the SEC charges against Binance and Coinbase have caused turmoil, particularly for tokens implicated in the digital asset securities filings like Solana, MATIC, Cardano, etc. But institutional investors are likely to be cautious about allocating to altcoins due to the murky regulatory background. So they are falling, and they're falling in unison. But token holders should brace for maybe a dragged out judicial process. We don't expect this to be solved for years. But as the adoption goes up, so should the value of these tokens based on Metcalfe's law. So we'll see what happens, exactly how long the SEC can dampen the spirits. And we'll also see how long it takes for Asia, China to ramp up, Hong Kong to start buying these things as well, because they don't care what the US does. So we'll see. So Bitcoin ETH dominance could strengthen over the next 6 to 12 months due to the risk of allocating to altcoins. Hence, allocation is so important. I always stress that here on this channel. And there's a lot of confusion about my allocations, but I share them openly and honestly with great frequency. But since the bottom, this is the important part of this particular chart here. Thank you to the team at K33 to put it together. Bitcoin is still up 65% from that bottom on November 21st, 2022. Ethereum, 58%. Solana is up 29% from that bottom, but the others are all down. Cosmos down 6%, Cardano down 7%, Mana down 9%, Binance 10%, MATIC 20%. They got hit hard. Axie 22%, ALGO 54%, Chili's 64%. So again, it's important that you allocate accordingly. These ones in red are what I currently have right now, ladies and gentlemen. So again, it's been a rough market, but certain things can still hold up okay over time. That's why it's important to look at time series, and that's 8 months ago nearly. Let's look at flows by asset. Bitcoin saw outflows totaling 52 million with this 8-week run of outflows totaling 254 million. But that is only 1.2 of total assets under management. Short Bitcoin saw a little outflow. That's actually a bullish sign, with its 7-week run of outflows representing about 44%. So a lot of people have been getting out of their short Bitcoin positions because they believe the halving is coming, and that means price will go up. No ifs, ands, or buts. No SEC. It doesn't matter. Ethereum saw outflows of 36 million, the largest single week of outflows since the merge in September 2022. And it has fared relatively better than Bitcoin, but that was a big ding for Ethereum. And all coins saw mixed futures. We had inflows into Litecoin, XRP, and Solana. Last week, Solana had a drainage of about 300,000. Now it's back up again, which is good. And a lot of these funds are outside the US. They're in Canada, Europe, South America, etc. And interestingly, on aggregate, all coins have seen inflows year to date, with the exception of Tron. And this is in stark contrast to Bitcoin and Ethereum. So remember I said ALTSEASON is coming back? Sounds hard to believe with the SEC cloud, but that's what the numbers say. Hence more confusion with what's going on. So let's talk about exchange inflow by cohort. This is also very important. This is for Bitcoin, and this is the exchange inflow breakdown. Obviously, when coins come onto an exchange, it can be a bearish sign because people plan to sell them, but you also have to analyze who is actually selling them. And the team at Glassnode can break this down by cohort. And here, the investor groups that have reacted most significantly to the recent regulatory news, the people that got scared first are the short-term holders. They account for nearly 77% of deposit volume, which is 23,000 Bitcoin that went onto exchanges. Long-term holders, just 1.9% of deposit volume, only 500 Bitcoin versus 23,000. And inter-exchange transfers are the other 20%. It's about 6,500 Bitcoin. So you got people kicking their Bitcoin from X to Y to Z, etc. Wallet to wallet, so there's a lot of that happening too. And that part of that is probably fear from Coinbase and Binance being under scrutiny, especially when the SEC is trying to freeze Binance funds, not just Binance US. They said also the rest of them. Of course, that's not going to fly, but the SEC are trying all sorts of weird stuff anyway because there's some strange plan going on. Anywho, in addition, Chainlink, I rarely talk about it, but IADSS did fire a Chainlink buy yesterday at $5.08, and that's the first one in a very long time. And the question is, I was looking at it last night because I got a question regarding Chainlink. Somebody saw this and is like, oh, let's have a look. Well, look what's going on. And again, every asset has a price. If something falls down enough, it can become very attractive. That's exactly what happened with Chainlink. So Chainlink sentiment came out today after my thing yesterday. Chainlink price hits a 3-year low, $5. IADSS fired at $5.08. As whale transactions hit a 2023 high on dip buy signals. Oh, again, as I say, watch the whales, the $1 million whales started snacking and feasting yesterday, which was kind of stunning. So watch what they do. They buy cheap and they sell high to you guys. Don't be unlike the whales. Be like the whales. That's kind of the simple message I'm trying to get across here. Speaking of whales like Sailor, this is the list of Bitcoin miners. Big thank you to Sanjay for sharing this with me. This is the Bitcoin miner, Bitcoin Holdings as a percentage of their market cap. And you can see, obviously, MicroStrategy, they own more Bitcoin than their market cap. Obviously, they have some debt you got to net off as well, but still, it's a stunning ratio. Hut 8, 54% of their market cap is made up of Bitcoin. And that could prove to be very well if we get a supply crunch on Bitcoin and Bitcoin goes to the moon. Hut 8 will look like the smartest folks in the room. Hive, 23%, Marathon, 20%, Riot, 10%, Bitfarms, 5%, and CleanSpark are beginning to stack a little bit now, 3%. They used to always sell immediately to buy rigs. Now they're stacking a little bit. So interesting to watch this too as we go forward. And when these guys stack more, these guys and gals, that can also be a very bullish sign. In addition, this is a cool piece on Glassnode. And again, the point is the numbers may be off, the ratios may be off. I tried to figure out, is BBL, is that 100,000 barrels of oil or a million or whatever? Anyway, the point is though, there was a time when the number of Bitcoin per oil, the all-time high is 1,049 per however X number of BBLs that is. I don't know if it's in liters or gallons or some type of weird measurement. It must be some gallons. I tried to make it like barrels of oil times 100,000 and I couldn't get the ratio to work. But the ratio is in line. Now, when you go back to where we were, and again, as a reciprocated ratio, the current value is now 383 Bitcoin per BBL, again, tied to the price of oil. The price of oil is about 70 right now. It was higher, but it was also lower. But the point is, year to date, the value has gone up by 85.8%, which means Bitcoin relative to oil has gone up by 85.8%. And that's the big takeaway here, because there will come a time probably where people will trade barrels of oil denominated in Bitcoin. And that will be an exciting time, moving away from the petrodollar over to PetroBitcoin. Hopefully, that's how I call that. It doesn't. Anyway, fun times. Let's talk about some of the macro news today as well. This is CPI X Shelter. And you can see the green line is kind of the consumer price index, which kind of includes everything. But a huge chunk of that is actually shelter. I think it's 45%. Thank you, KN out there. And that is massive. But you can see here the CPI has been falling for 11 consecutive months, fell to 4% in May, down from 4.9% in April. That's a big move, ladies and gentlemen, 20%. And excluding shelter, which can be a volatile component of the CPI, inflation has declined to 2.1% from 3.4%. And remember, when the government measures shelter, they do random surveys of a couple of people. The data is about 6 months late and is completely meaningless. So this means the next risk is deflationary risk, and we've all talked about how dangerous that is. In addition, the M2 money supply, which is a measure of the money circulating in the economy, has declined as well for the 11th consecutive month, despite them doing some backdoor kind of QE stuff. We won't talk about that, but that's a separate issue. But this is its lowest level since the Great Depression. And the decline in money supply is also leading to disinflation. Okay? So, quick reminder, when things disinflate, debt explodes. So, things like we watch here, debt to GDP ratios, they're going to be pretty horrific. That could hit 140%. Mark my words, if we go deflationary. And that becomes a real problem for the Fed. A real problem. Because then all the ratios look horrific. And the president will say, what are you guys doing here? This doesn't look good. Anyway, deficits will explode. QE to infinity forever. There's no doubt about that. The question is, at what pace? But this was good news on CPI. And backing that up as well, only 2% of investors expect higher inflation ahead of today's CPI print. This was the B of A, Bank of America fund manager's view. And many investors, top investors, believe only 2% expect higher inflation. There's a strong conviction on inflation being a lot lower a year from now. 67% expected to be a lot lower, which means we are so close to that 2% already. Going a lot lower than now is deflationary. And that's the kiss of death for everybody. So be careful, everybody. Now, the CPI breakdown, it has moved down from the peak of 9.1 last June to 4% in May. Not bad. But what's driving the decline? If you look here at this chart from Charlie Bilello, lower rates of inflation in fuel oil, gasoline, gas utilities, used cars, medical care, apparel, which is clothing, New cars, food at home, and electricity. That's coming down. But there are rates of inflation in transportation, food away from home. It's crazy how much people don't eat at home. It's healthier to eat at home, ladies and gentlemen. And shelter have increased since last June. And that's kind of the mixed bag. But again, the shelter stuff, the measurement is way off. Let's talk about what they're going to do tomorrow. Pause to reflect, and then done is my theory. A pause to reflect is like, okay, let's look at some more data coming in. Then it'll be, hey team, disinflation's here. Let's crap the bed. Let's fire up that money printer, cut rates, and get inflation back, because they need inflation to survive. They inflate their way out of debt. But once inflation goes zero, the debt explodes. And that's what hopefully these guys are watching. And again, we're right there at the 2% level. So that's enough inflation news. And speaking of peak oil, because we were talking about the PetroBitcoin, and this is why the Saudis are all of a sudden getting into buying soccer and golf organizations and all sorts of stuff, because peak oil demand is almost here. EVs on the road. And as you know, I like Tesla. There's a huge transformation taking place, but they are already displacing huge demand for oil to the tune of 1.5 million barrels a day are now being replaced by EVs. And global sales of cars powered by oil peaked 6 years ago, ladies and gentlemen. ICE peak 6 years ago. ICE will be no more than 35% of new car sales in the year 2027. The ICE sales are just going to go like that. And so will the demand for oil. So we'll see if it makes for a better environment. Now, switching gears to the ugly news. I don't know if you mentioned the word environment, people get so upset. I've no dog in this fight, so sorry for saying that word. But this is the ugly news, ladies and gentlemen. The Sahm rule is a formula developed by economist Christina Romer that defines a recession as 2 consecutive quarters of decline in the employment to population ratio. And as of June 2023, in the United States, 18 states, including the District of Columbia, you could nearly call that 19 states, have met this criteria, indicating that they are in recession. All right. And these states, I wish my eyes could actually read them, but you can see you've got, California, Oregon, Hawaii, Washington, Wyoming, DC, Maine, New York, Vermont, etc. West Virginia. Again, recessions galore all over the place, especially in some of the big states too. So that's here. A lot of people say, oh no, it's going to be a soft landing. It's like, it's already here by the Sahm rule, which is very reliable, by the way. And delinquencies continue to rise. This is more terrible, ugly news. You can see the spike in auto and other and credit card loans are happening. Even mortgages are beginning to happen, and expect this to get a lot worse as we go forward. Okay, and this is a real problem when people can no longer afford to pay their bills and they go beyond 90 days. And after that, it's no good. So make sure you guys don't hold any big high credit card balances. I personally pay them off. Everything's on auto pay. So whatever goes in the card gets paid when it's supposed to get paid. Never, ever hold a balance. Okay. Also, then tied to that too, sadly, more bankruptcies are looming. This is the default rates for US junk loans, and they're ticking up this year. And this is the precursor to, of course, bankruptcies. And we're already seeing a lot of bankruptcies too. We're seeing, we haven't even begun to see the commercial real estate list of bankruptcies going to hit. More banks are going to go out of business too, not only because of commercial real estate, but also delinquencies. I mean, we are here in financial Armageddon. We just don't know it yet. And just be careful out there. Look after yourselves. And finally, this is an interesting thing out of China and Asia and Vietnam and Thailand. They are now building smart vending machines, even for drugs. Pharmacists will be disrupted. These are mobile payments and combined with very sophisticated vending machines that can spit out anything you want. Whether you want to call this a robot or not, doesn't matter. But, you will have your medical doctor, whatever, fill your pharmacist requirement. Your drugs and pills will be spat out from this machine as we go forward. And that type of innovation happens over there. It'll come here too. And these things will be kicking out everything. So the robots are coming, like we've been saying. this is another example of that. So be careful, everybody. Hope you like the content. Love you all on Patreon. Thank you for supporting the channel. And I will see you all tomorrow. I have a very interesting idea for a video that will blow your minds, but it's a big Bitcoin math thing related to whole coinership. So if that is of interest to you guys, let me know in the comment below. I will do the work tonight and present it to you tomorrow. So with that, everybody, sorry about all the crypto confusion, but we are living in confusing times. Thank you to the more than 2,000 people here, and appreciate you hitting the like on the way out. I'll see you all tomorrow. Thanks to the mods in chat and everybody else. Love you. Bye.